Thanks for that, Vinny. Let's welcome in our next guest now. Abneesh Roy, Executive Director, Institutional Equity at Nuvama Group, is with us. Abneesh, firstly, what do you make of a lot of companies have declared their numbers in terms of the sort of growth they expect, margins, or their outlook. First, a gist of it. What do you make of a lot of these companies declaring their volume growth and their path of margins?
Yeah, thanks. Yes, we have seen quarterly sales update coming out with three, four companies. So definitely four, five key things. One, of course, is there is a margin improvement for most companies quarter on quarter. But yes, YOY pressure for most companies is still there. But my sense is Q4 further margin recovery will happen because the current crude oil prices and other deflation, there's always a lag of 2 to 3 months. So Q4 further build up in margins will happen. On the other bit, in terms of demand, I would say that rural demand still remains quite challenging. Although on a base effect, the numbers will look a bit better, but still, I think the rural FMCG volumes are still declining 4-5%. It used to decline 8 to 9%, but for the sector, still urban growth is much better. So e-commerce, quick commerce clearly helping. Uh, Also, we see that now because there is a deflation in categories like noodles, biscuits, etc., and even soaps, the volume growth will accelerate from Q4 because of the promotions also. So overall, we are positive on the sector. Our topics will be essentially Hindustan Unilever, Britannia, Godrej Consumer, and Nestle. So definitely things are improving. But yes, Q4, the real margin improvement will happen.
Will happen in Q4. Q3 will see some sort of improvement, and of course, your top picks are HUL, Britannia, Godrej Consumer, as well as Nestle. But Abneesh, I specifically wanted to speak about ITC as well. You put out an interesting note talking about how in this budget there is a possibility of an increase in the cigarette tax. Could you detail that out for us? What kind of impact will it have, and why do you expect this to happen in the first place?
So we have ITC as a buy, and we have a target price of 400. So we had upgraded ITC stock in February last year post the budget, and after that, if you see, the stock has been one of the best performing stocks in the Nifty and even in the consumption space. Even in Q3, we expect ITC to do well. We expect almost 17% EBITDA growth, which I think will be in the top tier in terms of growth. We also expect obviously margin expansion YOY for ITC, which again is a very rare thing currently, as I discussed. So apart from this, we also like the fact that company has been doing strategic M&A lateral hiring. Coming to a question, definitely, if you see, this is a key thing which every year is a monitorable. Having said that, if you analyze the data, I think it is best if the government is rational in terms of tax hike. If you see, cigarettes is hardly 8% of the total tobacco consumption, but in terms of the tax collection, it is almost 75-80% easily in terms of the total tobacco tax collection. Plus, if you see, the illegal cigarette industry has almost become one fourth of the industry. So, whenever rational taxes is there, the legal industry does better and they retake market share, and that's good for the government also. That's good for an overall economy perspective also. So I expect that if at all there is some hike, we need to see whether that hike happens or not. It is a 0-1 event. So difficult to say whether in an inflationary environment overall government actually does a tax hike. But if they do, I think it should be either a no hike or a mid single digit hike. Because anything beyond that, I think there is a cascading effect of the taxation also in cigarette. There is a cascading effect. Second, if you see BDs and the other forms of tobacco consumption, the taxation is very limited, although they are 92% of the total tobacco consumption in India. But in terms of taxes, hardly 20%. So I would say that it has to be a rational tax hike, if at all, but very difficult to say whether tax hike will actually happen or not because we'll get to know that on February 1st only.
In terms of the sector and the sort of move you're seeing, is it difficult to say now? Is markets trying to price in a rural recovery or waiting for comments on rural recovery from various managements?
So Q3, you will not see rural recovery being highlighted by any of the companies in any meaningful manner. Yes, because of base effect, you will see that the numbers are looking a bit better, but still, I don't think there is a rural growth for the sector. There will be companies which are gaining market share. From Q4, my sense is again the base benefit is there, but I would expect FY24 only when the real rural recovery will start, because by that time, maybe more deflation in fertilizer, diesel prices, and general inflation in life for the farmer. I think that will happen. Key important thing is around 30% of the population is facing tough time from a monsoon perspective. So UP, Bihar, Jharkhand, Bengal have a 20 to 30% deficit rainfall in this monsoon, which got over a few months back. So that is definitely impacting. So I would say next year, if the monsoon is good and the deflation is there for the farmer, then I think we can definitely hope. Also, this is an election year, so maybe there will be some benefit in terms of the stimulus programs. But nowadays, every year there is a stimulus for the rural. So I will not say because of election year there is going to be a big uptick in terms of stimulus, but there can be some rub-off effect in terms of sentiments clearly for the rural because of so many elections in 9 states and general elections.
Just before we let you go, Abneesh, also wanted your take regarding the paint sector as well. There's a lot of capex happening there, a lot of heated competition, but stocks like Asian Paints, etc., haven't done much, at least in the last 12 to 18 months. What's your take regarding the paint sector as a whole, and which stocks likely outperform there?
Yeah, we are positive on Asian Paints. Asian Paint of a kind of a high beta stock. I think quarterly results are a key monitorable. In Q3, as we have highlighted, October month was very tough for the industry because of very high rainfall close to the festive season. Normally, the painting happens in festival season if there is a gap of at least 2 to 3 weeks between rainfall and the festival. This year, it was just a gap of 8 to 10 days. In November and December, we have seen very good recovery for the paint demand. And I would expect that even next year, the paint demand for Asian paints at least should be one of the highest in the total consumption space. So when I compare a FMCG versus a paint, I think paint still should grow faster even next year because there is a waterproofing, putty, construction chemicals, which also helps core paints. On the capex bit, I think this is also reflective of the 4 to 5 year gestation. So the Madhya Pradesh project for Asian paints, it will take 4 to 5 years for the first phase. So that's a very long time, and there's a growth in the industry. So I would say that Asian Paint is a good stock to own. Definitely Q3, Q4, we will see margin expansion because crude has corrected, titanium dioxide has corrected. But the Q3 demand will be weak for the entire sector, and Q4 we should see recovery.
All right, Abhinish, thanks so much for that. The Auto Expo has returned and returned with a bang after 3 years, and EV seems to be stealing the show.